We've got a lot to talk about, that and more, with Lazard CEO Peter Orszag, who joins us now to talk about the company's latest earnings quarter and the broader market expectation for business conditions under President Trump. Stocks up, Peter. It looks like a really strong quarter. Again, 36% rise in net income. You talk about an inflection point for the advisory business. What are you seeing?
Look, we're on our pathway to Lazard 2030. We're ahead of schedule, and I think the year is looking strong, and within that, Lazard's on its way. It's really exciting.
So what about the pipeline for M&A and capital markets activity? There's so much optimism baked in around the incoming administration.
Well, I think it wasn't just the incoming administration. This was building, and basically you had a lot of strategic activity as we got into the back half of last year. Sponsors, that is private equity, becoming more active as we, approach the very end of the year. And then you layer on the perception that the regulatory environment is going to be more accommodating, and you've got a very constructive mix for M&A activity in particular.
Is it already happening?
Yeah, I mean, our results for the fourth quarter showed strength. A lot of what happened towards the end of the year were things that we didn't think were even very likely to occur, just snapping back to life and closing very quickly. And as we enter this year, there are a lot of discussions going on, pointing to, again, as I've said, a very constructive environment.
What about the asset side of the business, asset management, which hasn't been as exciting for investors as the advisory?
Yeah, look, I think the big question there is whether it feels a little like five-year-old soccer, everyone running to a very limited number of very large cap U.S. stocks. The valuation discounts with emerging markets and even with European stocks are now very wide relative to history, as are the growth differentials that exist. And so I think the question becomes in 2025 whether people start to look to diversify their portfolios away from just the very, very largest U.S. equities, and whether those U.S. equities are priced at or beyond perfection. We're already seeing some of that. So we're seeing inflows, for example, into our emerging market equities products and strategies, and we'll see how this plays out during 2025.
Hey, Peter, it's David. Coming into the year, and Sarah referenced this, I mean, there was a great deal of optimism that we're going to see a lot more transactions, small, medium, and large. We're a month in. Obviously, a lot of that had to do with regulatory, but not all. Are you still as optimistic? I mean, are we set up in some ways to be disappointed?
No, I'm still optimistic. I mean, the client discussions that we're having are very constructive. There have been some notable deals. Constellation Energy, for example, the one that we were on, is a good example, but mostly based on the nature of the client discussions that we're having. This is not a linear thing. It's not just week by week. Instead, it can be lumpy and come and go a little bit. But for the year as a whole, we're set up here for success because there's a lot of client dialogue going on. And then within that, Lazard has been hiring and regaining market share, which is what happened in 2024.
Yeah, do you really feel as though you've replenished the ranks at Lazard? I mean, there was a sense that you guys had lost your way to a certain extent after, so many decades as sort of one of the key boutiques on Wall Street. You've rectified that, in your opinion?
It's a process. There's definitely a sense of momentum and an inflection point. We've been really pleased with the talent we've been able to bring on in sports media and entertainment and consumer retail, private capital in Germany and the Middle East, and we're going to keep building in 2025. So I think the sense that Lazard, despite being 176 years old, is on the move, and a sense of inflection is really now pervasive.